Well, it does look like we have a huge rally in the Asian markets, and of course, that's following what happened in the on the Wall Street indices. So let's check out how things are panning out in India itself. Part of that rally perhaps played out on Friday, but more importantly, we are stepping into an earnings season. So, you know, how much of these global cues are valid and to what extent should we have one eye on what will happen in the earnings season? To put all this into context for us, Vikas Khemani, the founder of Carnelian Capital Advisors, joins us now. Good morning, Vikas. Thank you very much for joining us and a very happy new year to you. Have a great 2019. Make Carnelian Advisors do very well.
Thank you, and wish you and yours a very, very happy new year.
Okay. Well, you know, the global cues are definitely looking positive at the moment, with all central banks willing to be lenient. CRR cut from China and Powell also indicating. What about our own, you know, earnings season? Do you think this one will be, you know, better than the previous one? Are we going to finally see that double-digit earnings growth that we have been looking for?
I think, Leda, you know, this current quarter specifically, you have to see in the context of the, you know, what happened in last, you know, specifically one quarter or last 4 or 5 months. I think earnings season being smooth in a very, very volatile environment is going to be very, very difficult. And we have had many shocks, you know, and whenever there's a significant shock like this, it has to take impact on the, you know, everything, whether it is demand or from supply side, and also especially the cost aspects of many businesses. So I find that, you know, I think this quarter may not be as relevant from looking that perspective and may not be very robust. While I don't think, you know, everything is broken, things will be progressively improving only. But expecting that, you know, double-digit kind of growth, you know, we will have a super, as markets have been expecting earnings growth for quite some time, and we've been having shocks after shocks. So I think probably this is one more of that year or a quarter. But I think it is making nice base for if the global environment turns out to be all right. And I think Indian economy is by and large on the mend, by and large on the right track. We are not facing from inflationary pressures. You know, oil prices helps. I think we are relatively insulated from the global shocks. I think global economy is slowing down, which surely would have, you know, bring some benefit for Indian economy in terms of oil prices and commodity prices. So I think in that sense, there are lots of macros which are falling in place for India. So I would tend to think that we will slowly be on a good path. Having said that, market might be, you know, noticing or taking note of this probably with the lag, because I think it's very difficult today, given the kind of volatility, given the kind of macro, you know, going on. You know, you will see macro environment and you will see policy response, and that interplay will keep on changing through the course of the year. And in that environment, I think markets will be probably not looking only at earnings, but a lot more other factors.
Okay. Vikas, hi, good morning. Happy New Year to you. What do you think the big theme of 2019 could be? I mean, a lot of people are betting on the pickup in the capex cycle, but that seems to be a bit of a crowded trade right now. According to you, what would the big sectoral theme be?
I think, you know, if you ask me again, as I said, that, you know, economy is slowly on a right track. I think credit has been sort of, especially the, you know, has been little on a back foot, or
The
credit
NBFC credit for sure.
Overall credit has been little less than what our economy needs at this point in time, and given our banking setup, whether it is public sector or even given NBFC. I think, you know, private sector banks now stands a very good chance given their liability franchise and credit pickup in the economy. I would say, you know, that, and some of them have not done as well in last you know, couple of years, and probably the time has come for you know, that segment or sector to do well, especially the corporate credit kind of sector. And, you know, in my opinion, you know, you should look at India's story does not change. The structural themes are not changing. The thing is that, you know, the financialization is not changing. So some of the under-penetrated sectors like general insurance, which are fee-based income, very, very good theme. Structural compounder over 10 years. In this kind of market should be, you know, look to, you know, one should look to accumulate. So there are many themes. Unorganized to organized, I think, is still, you know, in my opinion, we have just seen the journey beginning. And in this period, if you see, you know, correction, because markets are going to be volatile, if you see any of those segments, sectors correcting, it will be a great time to kind of build position, because I think unorganized to organized theme is not for a year or a quarter. It is going to stay here for at least years to come. I think within that you have to pick up. So it's not, if you ask me, story is not changing. India story, my theme broadly by and large remains same.
Sure.
probably you might see little bit of drop in the disliking of IT sector by the market in this year, given what is happening globally. So those things we'll have to see how the environment changes, what is the policy response, how the growth changes. So I think those things we'll have to see, but broadly themes remain more or less same.
Because hi, good morning. The big shocker was the auto sales data, and you saw that kind of derating, especially in stocks like Eicher Motors. Your thoughts on that?
So I think, auto sales definitely disappointed market. Again, a lot to do also with the kind of volatility we saw in last quarter, some of the shocks which we saw. Also, auto sector have been doing well, so a base effect was high. I think I would attribute not to this to a structural kind of move, but more to do with the last 4 or 5 months, what happened in the environment. Typically, when this kind of shocks happen, there's a natural tendency to, demand to kind of go down. Any whether it is any consumer to kind of pull back, especially the discretionary one. So I think I would attribute to that. Eicher Motor is not to be very frank in a segment where it is too. It can pick up because it's a huge following. There's a waiting period. So I think all those things will come back. The only reason probably it would have corrected a lot because the valuations were very, very high. So typically, whenever valuations are high. And
fall in sales as well in December, and even slowing in November. Yes. That's why I guess.
No, it is. So I think all of them are coming on a high base, and I think and plus the kind of volatility had it all of it.
So you would still be positive on stock.
I would look to. Again, company specific thing, but I would look to still because they are not. If Indian economy has to pick up, you will start seeing that coming back. Valuations play, you have to see what valuation you want to buy and all those things. That you can't, because whenever something is perfectly priced, and any disappointment happens, you will see similar kind of situation. We saw same thing happening in Maruti. So business demand coming back versus stock doing well, not doing well is a very two different things.
Yes. So this Indian economy, domestic economy picking up, a lot of stocks are indicating that. Titan, for example, the management said yesterday over the weekend that there's a very good momentum across all businesses. They're looking at 22% growth in jewelry. Are these names that one should perhaps look at for this year?
So again, I would say that consumption is going to remain theme for a long time. Within consumption, there will be discretionary, there will be non-discretionary. I would say, you will start seeing, players like, Titan or, they are structural play, part of the structural play. If you see, correction in those names, in my opinion, they are worth looking at and evaluating. I don't have a particular insight of late in terms of valuations or where are they and the management commentary, but I believe that consumption is going to be structural story. Within that, whenever we see these kind of corrections, will be a great time to. Because as the per capita income expands, which is expanding and is going to accelerate further, you will see consumer spending more and more, and it's all obvious to us that we are spending more on non-discretionary. We are constantly spending, right, and that pie is growing, and you will see those things doing very well. I don't have a doubt in my mind. At times, sometimes when the macros environment is looking weak, volatility is weak, I think markets tend to kind of underplay and overplay depending on, but I think demand is going to remain structurally in the right and positive direction.
Okay. As you spoke about, the volatility in the credit markets, obviously the casualties were NBFC and real estate sector. Will you look for bargains there at all?
Absolutely. I have said multiple times that NBFC does serve a purpose in the market, and I don't think, the business model is over. Yes, there was a mismatch in terms of ALM, which has got corrected. There was anomaly which has got corrected. NBFC will, and there are good bargains available there. This year they might probably, given the second half, whatever happened, you might see earnings growth slowing down. But I do think that 18-19 they will get back to 18-20% earnings growth and good ROE profile. So I'm not as worried about NBFC. Even within real estate, I think that unorganized to organized theme plays it is very much visible in real estate. Real estate is going through that transitionary phase of RERA, credit, and everything else. But this is also forcing out a lot of weak players in the market, forcing out demand which was supply which was probably not a solid supply. So I think this is also making structurally a good case for real estate. So this year would be a great year in my opinion to as and when the volatility hits and you to do bargain hunting in real estate sector. I don't have a doubt in my mind.
Okay, just one last question from my end. If someone wants to be a bit risk averse and escape volatility in 2019, is it better to buy before the elections or after the elections?
I wish I knew that answer.
What would you advise your clients to do?
I would say that look, equity
India
investing
Today opinion poll is giving an indication that it's good to buy now. It's not going to change much.
If you are investing in India, it's best not to look at exit polls and opinion polls and all. We have, I think, time and again proven, including the last elections, that elections actually markets tend, or I think all of us tend to overrate. I think they are just at that point in time, bringing some volatility. Eventually, they don't matter much. And if you are an equity investor, I do believe that from now to March, now to May or June, as the volatility hits, you should be putting your money into the market. As long as we have a stable government, whichever party, I don't think it is going to matter much. We need a stability, and continuity of the policy is more or less given. I don't think anybody is going to reverse the economic policy reforms which we have seen. So I think what you should look at in equity investing is long-term investing from 3 to 5 years perspective. And probably I have said that multiple times that this year investing would be probably similar to what was the setup in 2013-14, and that kind of next 3-4 years you could see in the markets.
Okay, we'll have to leave it at that. Vikas, thank you very much for dropping in our studios in the first week of the new year, and hope you have a great 2019.
Thank you very much. A pleasure to be here.